How are you looking at the market trend right now? I mean, what's happening? Firstly, an overview of the forex markets in general.
Sure. There are a couple of things happening. One is people are talking about stagflationary risk in US. So the market has started pricing some kind of a rate cuts, about 65 basis points by the end of this year, which is driving dollar slightly weaker. But I think most of this weakness is actually coming from the euro strength. Now, what we have seen in Europe, and especially Germany, they have come out with a very big fiscal package in terms of spending on infra as well as on military. And it's a game changer in our view. What they have said is the euro 500 billion worth of spending, which they will do, is about 11% of their GDP, which is massive. That's going to change the whole structure of how the capital flows behave in the next few months. So we think that it's a massive euro strength story right now rather than a dollar weakness story. So there are two parts to it. So you play the euro strength, but dollar weakness is not that visible to us right now.
And the fiscal package, the fiscal support that the Eurozone is getting from the announcement, do you think that's well priced in for the euro? Because from talking parity and sub-parity, we are now swinging the other way. So how much more strength in the euro do you expect?
Right. I think we expect more. We're expecting 112 by end of this year and then 120 by end of 2026. So it's still more to go here. I think what we need to see is that with this package, a lot of money which was going into US equities earlier might actually start to come into European equities, and we are already seeing that. Secondly, when you think about the debt side, a lot of money was going previously to US treasuries, now can come back to bonds and OATs and other European government bonds. And thirdly, when you think from a whole Europe point of view, Europe is a current account positive as a region, right? Surplus. Now, previously, that surplus used to go towards US assets. Now, after this whole announcement, that thing can change quite drastically. That means that money will not flow out, will still stay in the Europe region. So that means on a balance of payment data, it will start to look quite positive, which is again positive for Europe.
Okay, that's interesting. But what about the reversal in the dollar, right? Because a lot of analysts earlier on were saying the dollar has more room to run, right? I believe you were also very positive on the dollar. So there's been a reversal there. While you say a large part of that is a Europe story, is the fiscal policy stimulus story in Europe, how much of that would you attribute to unpredictability from the Trump administration?
I think there is some. The kind of...
And stagflationary fears that you're talking about. Plus rate cut expectations.
Correct. So a few things, like you said, going on. One, tariff. People are not sure how much tariffs will come on each country. So they are delaying their investment decisions, they're delaying their consumption decisions, and that's why market is talking about slowness in the growth data. We think market is less focusing on inflation dynamics right now, where we think Fed will focus. So we have an upcoming FOMC tomorrow. We think Fed will say, look at the inflation. Inflation is still very high. The PCE indicator, which they normally track, is still very high. It's in fact going higher. Look at the unemployment data, absolutely no signs of recession there. So I don't think Fed will focus on growth here. They will focus on inflation and unemployment, which is their main mandate. And that's why we think Fed cuts, which market is pricing, is wrong. We still believe Fed will not be able to cut policy rates this year. We are slightly different from the market here, and we think only Fed cuts will come in 2026. So now talking back to the dollar story, we are in an environment where a lot of uncertainty is there, and therefore US equity markets are coming down. So, Dow's and S&P is falling. And typically, this risk of environment is actually good for dollar. Now, if you remove the euro from the DXY, you will see dollar is actually not coming down. So you have to disintegrate between euro story and the dollar story.